Hi friends, good afternoon. Today I have about four stocks in which golden crossover is likely happening at the moment, and these four stocks you can keep them on your radar. It seems like once it breaks that crossover pattern, it will start moving to make new highs. So, golden crossover is a well-known stock market signal that may indicate a possible rise in the stock's value. It happens when a short-term moving average goes above a long-term moving average. That usually suggests that the stock price is trend is getting stronger. This usually means the 50-day moving average goes above the 200-day moving average. The 50-day shows recent price trends while the 200-day shows the long-term trend. When the shorter average crosses above the longer one, it is seen as a positive sign suggesting that it may be a good time to invest in the stock. So, however, I would still suggest you to uh, speak to a qualified financial advisor or broker so that they could give you the right expert advice and opinion. We'll name the four stocks and the current price range that they are trending with. These are four Nifty 500 stocks. The first one is State Bank of India, established in 1955, headquartered in Mumbai, offers a wide range of banking and financial services to individuals, businesses, strong domestic and global presence. The golden crossover took place at 789 rupees on the 6th of June with a decent volume of 1.7 lakh shares. The stock closed at 820 rupees on Monday's trading session, which was on the 9th of June, reflecting a 0.86% increase in the intraday trade. The second stock is Ashok Leyland, established in 1948, headquartered in Chennai. The company is India's largest commercial vehicles manufacturer, produces trucks, buses, defense vehicles, power solutions, serving both domestic and international markets as a subsidiary of Hinduja Automotive Limited. Its golden crossover took place on Friday, 6th of June, at a price of 224 rupees 96 paise with a strong volume of 1.9 lakh shares. I'm sorry, 11.9 million, 1.1 crore shares. Sorry, yeah, 1.1 crore shares. The stock closed at 243 on Monday's trading session on 9th of June, reflecting a 0.4% increase in the intraday trade. The third stock is Nava Limited, established in 1932 with a headquarters in Hyderabad. Diversified national company operates in ferroalloys, power generation, mining, healthcare, and agri-business with significant operations in India, Southeast Asia, and Africa. The golden crossover took place on the 6th of June. Price was 477 rupees with a low volume of 438,000 shares, that is 4.38 lakh shares. The stock closed at 528 rupees on Monday's trading session on the 9th of June with a 1.13% increase in the intraday trade. The fourth and the last stock for today is Steel Authority of India (SEAL) Limited, established on 24th January 1973, is a Maharana public sector undertaking and India's largest government-owned steel producer. Operates integrated and special steel plants, manufacturing and selling a wide range of iron and steel products for diverse industries. The golden crossover took place on 6th of June, which is Friday, at a price of 118 rupees with a decent volume of 1.55 crore shares. The stock closed at 133 rupees on the 9th of June on Monday's trading session, reflecting a 0.9% decrease in the intraday trade. So the price fell on Monday. Sorry, the price went up on Monday. However, the volume decreased on Monday. So important disclaimer: all investment opinions and recommendations mentioned are those of the respective experts, broking houses, and rating agencies. These views do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor broker before making any investment decisions. Let us go through the current price ranges. This is the SBI logo. Current price of 815 rupees, 0.9% up in the last 5 days. 1.63% return in the last 1 month, minus of 5.5% in the last 6 months, a negative 2.5% overall in the last 1 year. This is SBI. Current price is 16, high of 899, price to earnings ratio of 9.4, book value of 546. So dividend yield of 1.96%, return on capital employed is 6.5%, return on equity is 17.2%, face value is 1 rupee, good profit growth of 36% in the last 5 years, healthy dividend payout of 18.2%, company has low interest coverage ratio, contingent liabilities of 7,42,584 crores. The company includes another income of 1,72,406 crores. 406 crores. Revenue has been consistent in the last 3 quarters. Net profit has remained also constant. There hasn't been any growth in the revenue or the net profit. Year on year, you can see there has been about 20% revenue growth year on year. Then on the net profit front, yes, there has been a substantial increase. You can say 20% increase uh, between 2023 and 2024, and 15% between 2024 and 2025. So an average of about, you can say, average of 17.5% in the last 2 years. Then we look at Ashok Leyland. These are the commercial trucks that it manufactures. 1.63% return in the last 5 days, 3.5% in the last 1 month, 3.5% in the last 6 months as well, and just 0.55% in the last 1 year. The company is a flagship company of the India Group, having long-term presence in domestic, medium, and heavy commercial vehicles. They, they manage driver training institutes across India and have trained over 8 lakh drivers since its inception. Stock P of 22, which is slightly high, book value 41, dividend yield of 2.62%, 6 times its book value, return on equity 29%, which is good, face value is 1 rupee. Promoters have placed 41% of the shares, which is a highly negative influence that could cause a breakdown in the stock price and can be highly volatile in terms of volume as well. 59.7% dividend payout, 54.6% good profit growth over the last 5 years. Sales, you can see there has been about a 15, uh, almost a 20% revenue growth between quarter on quarter. Then net profit has grown by about 30% in the last quarter, which is a very good sign. Overall year, sorry, overall year to year only 2 to 3% revenue growth. Net profit has grown by about 25%, which is a very good sign. Then we have Nava, the third stock for the day. This is the logo, and it had a buyback offer in February, March earlier this year. Currently 1.55% down, 13% up in the last 1 month, 3% return in the last 6 months, and 61% return in the last 1 year, which is an amazing performance. Established in 1972, now Bharat is a multifunction multinational company operating in Southeast Asia, Africa, with businesses in metals, manufacturing, power, mining, agribusiness, and healthcare. It has a plant in Paloncha, Telangana, and the other plant is Kharagprasad, Odisha. It has a power generation capacity of 434 megawatts from its eight thermal power plants located in different states of India. 65% owned subsidiary Mumbai Collieries Limited, Zambia's largest coal mine concessionary, which also led to the development of a 300 megawatt power plant in Zambia, which represents 10% of Zambia's total installed power generation capacity. Stock price to earnings ratio of 14, current price of 527, high of 674, return on capital employed 17%, return on equity 15%, face value of 1 rupee. Company has delivered good profit growth of 18% in the last 5 years. Debtors have improved from 180 days to 129 days. Promoter has increased to 1.2% stake in the last quarter, which is a very good positive sign for the overall performance of the company. The company has delivered a poor sales growth of 7.6% in the last 5 years. Tax rate is low. Sales, you can see there has been a good improvement in the revenue in the last quarter. However, for the last 1 year, you can see that there is a clear drop in revenue. Net profit has also dropped uh, in the last 3 quarters, so not a very good sign overall. Year on year, slight improvement revenue, slight improvement net profit, which net profit seems to be good. A little bit of good improvement there, about 10%, 11% improvement in the net profit. Reserves have grown by about 700 crores, which is a positive sign. Borrowings have doubled, which again is a negative sentiment, and higher borrowings lead to higher interest costs. So that is something that can play negatively on the part of the company. Overall liabilities have also increased. Then last company for the day today is CL PSU Undertaking. 0.4% negative in the last 5 days, 12.3% positive in the last 1 month, 4.75% value add in the last 6 months, and 12% negative return in the last 1 year. Steel CL is the one of the largest steel making companies in India and one of the Maharatnas of the country's central public sector enterprises. Produces iron and steel at 5 integrated plants and 3 special steel plants located principally in eastern and central regions of India and situated close to domestic sources of raw materials. CL manufactures and sells a broad range of steel products. 133 current price, 55,000 crores market cap, stock price to earnings of 21, which is good. Book value is 143, so the company is trading at 0.91 times its book value, which is very good. Dividend yield 1.5%, return on equity is 4.5%, which is very low. Face value is 10 rupees. Company has maintained a healthy dividend payout of 28%. Low poor sales growth of 10% in the last 5 years. Low return on equity of 5% in the last 3 years. Contingent liabilities of 42,000 crores. Overall 20% increase in revenue from quarter on quarter, the last quarter, and the net profit has zoomed 9 times, which is a huge number. However, there is overall improvement in the last 2 quarters has been about 30%, which is a good sign overall. Overall net profit has reduced compared to the previous year, so something that would affect the financials and the price of the stock. Reserves have slightly increased. Borrowings have also slightly increased. Overall, other liabilities have reduced, which is a good positive sign. 65% promoter holding increase of FI holdings from 2.6% to 3.2%. Direct institutional investors have also increased their stake from 6% to almost 16% in the last 2 quarters. Public holding has also increased from 6% to 16%, which means that there has been a uh, what do you call, promoter share capital has reduced since there's been about a 20% increase in the overall uh, there's a 20% increase or a 20% decrease of the promoter shareholding, with 10% increase for both direct institutional investors and public holdings as well. So friends, thank you for watching the video. We'll connect with another video very soon. You can see the number of the ratios here. Inventory days have reduced, days payable have reduced, debtor days have slightly reduced. Overall cash conversion cycle has gone up. Working capital days remain constant. Return on capital employed has been gradually dropping year on year, so a cause of concern. Friends, thank you for watching the video. We'll connect with another video very soon. Please share this with your friends, family, and associates so that they could benefit from this information. If there is any further improvements in the content and the quality of the video, please leave a note below the video so we can make necessary changes and improvements in the overall content. So thank you for watching once again. Wish you a good happy week ahead, and we'll connect with another video very shortly.